Hi guys, welcome back to the channel. In today's video, we're going to be looking at the headline, Sudden Crypto Market Drop Sends Bitcoin Below $22,000. So last week we made a video about Bitcoin actually jumping up to like $25,000 or something like that. And I kind of knew it was only a matter of time before it dropped down. And you know, we've seen this in the last week. It's dropped around something like 16%, but we'll get onto that later into the video and we'll have a look at the cryptocurrency price heat map so we can see which ones have dropped further. Bitcoin on Friday fell to its lowest level in more than 3 weeks, dipping below 22,000 amid a sudden crypto sell-off in early European trading. Bitcoin plunged $22,000 to below $21,000 at 4 p.m. ET, according to CoinDesk data. Earlier in the morning, the cryptocurrency fluctuated between $21,500 and $22,000. It comes shortly after the world's largest digital coin surpassed the $25,000 mark level for the first time since June, following the rise in the US stocks. So they're talking about last week, the Bitcoin actually jumped to $25,000 and we covered that in a video. There was also other coins that jumped as well, but there were also other coins that went down like the Celsius coin and stuff like that. Ether fell from $1,800 to $1,728 at the same time before staging a muted rebound. It had slipped again, falling further to $1,683. So I think Ethereum mining is still profitable at a good rate right now at $1,683, but it's kind of slowly going on the decline and becoming less profitable because of this declining coin price, and we're seeing higher electricity costs by the day. A specific cause for a drop at the time, which also sent Binance Coin, Cardano and Solana falling, was not immediately clear. It's showing the pattern of a flash crash as the assets immediately rebound sharply but sank even lower in the hours that followed, said Suzanne Streeter, senior investor and markets analyst at Hargreaves Lansdown. It seems likely it was as a result of a large sale transaction in the absence of other more external factors. So there has been a lot of transactions going on the network for various different coins just because of the US stock market rise. Maybe they were selling off a couple of their stocks in the US stock market and thinking about putting it into cryptocurrency last week. And then they realize, maybe we should start taking profits out. Other people realize that. And then they took their profits out, which caused this rebound back to the same price. Streeter said it appeared Cardano made the first plunge downwards, followed by Bitcoin, Ethereum, and then smaller coins like Dogecoin. This fresh chill has descended amid fears that the market is heading for a crypto winter, she added. I personally believe we're already in a crypto winter, so, this person is obviously thinking that the crypto winter is something else. Although at 21,800, Bitcoin is still some way off its June lows of under 19,000. Volatility is once again whacking the market. US entry markets have pulled back since Wednesday's release of the July Fed meetings minutes, the key takeaway being that the Fed likely won't be finished with rate hikes until inflation is tamed across the board, with no guidance offered on future rates increases either. So we obviously have this thing in cryptocurrency that the main purpose of Bitcoin was to hedge against inflation. And right now it's not really doing that because the price keeps fluctuating. Once we have a Bitcoin at a relatively stable price, let's say it hits 50,000 and it just doesn't change from then on out, then we know that it's going to be used as a back against inflation. So if your dollars are becoming worth less and less over the next couple of years, then you can put it into Bitcoin, and that allows for your inflation to be tamed. And basically you can just convert it back when the inflation is tamed. With a tight correction between the US equities and crypto in recent months, I suspect this has filtered through to crypto markets, and it's why we are seeing the sell-off. The trend has also perhaps been exacerbated by the liquidation of long positions on Bitcoin perpetual future markets. Citing CoinGlass data, Peters said Friday that the biggest liquidation of long positions in futures since June of 2018, also the date Bitcoin reached its lowest price of around $17,500. So there's a lot of futures in Bitcoin and in other coins, but Bitcoin's obviously the biggest one. So when that price fails, all the other coins' prices fail because people believe, in selling the greed and fear of the market. Bitcoin and Ether ended Thursday in the red, but Ether has surged more than 100% since mid-June as investors prepare for massive upgrades to the Ethereum network. So as we saw with Ethereum about 2 months ago, something like that, it was at nearly, $900 a coin. It was like $950 a coin at one point. But since then, it's actually jumped 100%. So if you would put your money in at that point, it had jumped 100%. So you could have doubled your money, back around 2 months ago if you would put it in at the lowest point possible. Obviously, people didn't really have that thought in their mind to put it in, and as a crypto miner, I don't really have the thought to add more money into crypto mining, as in like I don't have to add more money into my portfolio because I get all my coins from mining. I do convert some of those coins into, proof of stake coins, just because I believe that they're going to go up in price as well. Now, if we look at the crypto heat map, this is the 7-day period. As you can see, it's pretty much all in the red, apart from USDC and USDT, just because they don't really fluctuate that much, and they're basically stable coins, so they can't really be in the red or in the green. But over the week, as we saw in last week's video, this was pretty much all green last week's video, and this was over 7 days as well. Last week's video, I think Bitcoin was up 15%, so it's still up around 3% from last week. And Ethereum was up around something like 16, so I think it's kind of just leveled out back to the price that it was last week. There are other coins like Solana down here, Polkadot, AVAX, that are, being crushed a bit further. If we click on here, we can see that Solana has been crushed about 20%, Polkadot's 20%, Avalanche 22%. Basically, all of these, kind of proof of stake altcoins to Ethereum and Bitcoin have been crushed a little further than that of Bitcoin and Ethereum, which is obvious to see just because of the fact that a lot of them just follow the price of Bitcoin and Ethereum, and they don't have as much integrity in the space, so people are more fearful to sell Ethereum or Bitcoin, whereas they're not more fearful to sell Solana, Avalanche, Polkadot and stuff like that. I just want to have a look at Flux for now. It's up 5.33%, so it did actually have a massive jump in the week. That was just because of this mining that's happening on the network. A lot of people actually joined the network and started mining because of the price increase, and that was obviously due to Bitcoin's price going up as well. So Flux jumped actually 10% last week, I think it was, and that led to a lot of people starting to mine it. Lastly, if we look on what to mine, we've just got standard 3090 with 10 cents per kilowatt hour of energy. You can obviously see Ethereum's at the top, making $2.16 on Ethereum, which is slightly less than we were making last week. We were making around $2.50. Obviously, NiceHash is up there as well with $2.13, but I don't really believe in NiceHash anymore. And then under that, we have a massive drop in profitability from Ethereum to Conflux, just because these smaller coins do have bigger price fluctuations. Conflux is only at $1.54. So you're basically making around 70 cents more a day mining Ethereum than any other coin. But obviously the profitability is lower on them. Also, I want to talk about Flux. It's at $1.35. So it should be above Ravencoin at $1.34, but we're going based off overall profitability and not 24-hour profitability. It's just the way that this calculation works. As you can see, Ergo here is at $1.41, so it should be above it. If we just change this profitability, we can go to profit in 24 hours and hit calculate, and it'll actually show us the correct order for these. So we have Ergo, we have Conflux, Ycash, Ergo, Flux, and then Ravencoin. So that's the order of what to mine right now. So let me know in the comments below what you think the crypto market will be doing in the coming months. Like the video and subscribe to the channel for more content like this, and I'll leave links to the articles I covered in the description below.